Okay, it's two minutes past the hour. I think we can get started. I see people still coming in, but anyway, we'll just get started. So welcome to the webinar hosted by Catholic Investment Services. Thank you for joining us today. As many of you know, Catholic Investment Services is a nonprofit that was founded by some of the investment industry's most respected leaders. We exist to serve other Catholic nonprofits and their investment consultants as they pursue more of an endowment style approach to stewardship. I'm Zela Astarjian, Managing Director with Catholic Investment Services, and I would like to welcome everyone to the second in a series of discussions called Manager in Focus. Enormous thanks to our terrific guests, Jack Brennan, Francis Chong, and Eveyln Chen. We also would like to thank everyone for dialing in. We know this is a very busy time of the year, but we think it's a great opportunity for you to get a deeper understanding of one of our investment partners. Today's format is going to be conversational, and there's going to be time for audience questions after the formal part of the program. So please use the Q&A feature on our Zoom screen to submit questions. Our audience is muted, and the program is being recorded. Today's webinar is going to be an insightful and unscripted conversation between three investment professionals: our own founding chairman, Jack Brennan, and former CEO of Vanguard, Eveyln Chen, founding member and portfolio manager of the Sino Vision Taiwan Market Neutral Fund, and she's in San Francisco right now. Also joining us from Hong Kong is Evelyn's colleague, Francis Chong, who's a strategist, ESG specialist, and head of investor relations at Grand Asset Management. Like I said earlier, it's 3 a.m. in Hong Kong right now. So thank you so much, Francis, for joining us. We really appreciate it. Sino Vision is one of our managers in the diversifying segment of the Catholic Endowment Fund. We began our partnership with Evelyn and Francis in April of 2020 and have been very pleased with the positive impact she has had on the portfolio, basically outperforming our hedge fund benchmark by several percentage points. As you may have noted in her biography from the invitation, Evelyn holds a bachelor's degree from Fujian Catholic University in Taiwan. So we're very excited to discuss how her background has shaped her approach to investing. Before we begin our program, please join me in a short prayer during the season of Advent. Dear Lord, clear our minds and calm our hearts. Help us recognize what is good in our lives. Make us slow to anger and quick to forgive. Open our eyes to the needs of others. Amen.
Amen.
Jack, let me turn this over to you.
Okay, Zela, thanks a lot. And Evelyn and Francis, thanks so much for being with us for what's going to be, I hope, a very interesting conversation about your background, Evelyn, the firm, your views on investing in Taiwan, and importantly, other topics that affect that along the way. So let's dive right in. As Zela said, this is, for our audience, this is not a scripted, this is a conversation that's going to go wherever the conversation goes. Evelyn and I had a chance to do a little prep a couple of weeks ago, and I know you're going to be really interested in a variety of perspectives, and Francis as well from his point of view. And Francis, again, thanks for being up at 3 in the morning to
not a problem
to be with us today. It's really very valuable. So Evelyn, listen, I want to let's start out and just talk about your upbringing. It's an interesting story, Evelyn, and then we'll get to how does somebody from Taiwan end up in San Francisco running a hedge fund. But just tell us your background. It's fascinating, and I think actually will be quite inspirational to people on the call listening in.
I was born and raised in Taiwan, and I was born in a very big Catholic families. My auntie is a nun, and so I used to see a lot of bishops and nuns and priests in my childhood. And I was baptized when the day I was born. In terms of my upbringings, it's very big Catholic traditional families. So I went to Catholic school for high school, and also for my college as well, all private Catholic school. So I studied biology and finance in college. I got double degrees, but then later on I chose to do finance inside of biology as my graduate school in US. And after that, I started to learn companies, how to analyze companies. And the first company I worked for is called Solomon Smith Barney, and I was doing the research as a research associate for them and covering semiconductor stocks. At that time, it was all the IPO were in Taiwan were semiconductor stocks. So it's a really hot sector at that time. And then after that, I worked for Lehman Brothers for about 2 years, covering hardware stock. So I accumulated pretty good knowledge about the whole supply chain, really starting from the IC design and foundry to the backend, and all the way to the PCB and all the hardware components and EMS companies. And so then I got hired by Seasons Capital, is a long-short hedge fund in San Francisco, for about 3 years. Back in 2009, I decided to launch my own fund with my partner, Mark Lee, starting only with 2 people, running our own money. And then later on, I have a third partner, and then some senior analysts joined us in 2011.
I'm going to stop you there for 1 second. I want to ask you, what prompted you to come to the US for grad school? That's a big move from Taiwan, I would think. Yeah. Or were other members of your family, did other members immigrate?
Yes. So my uncle and auntie are actually, they live in San Diego for a pretty long time. And my parents at that time was, that they didn't really think they can manage me anymore. I was pretty rebellious kid, and although I was in Catholic school, maybe I was in Catholic for too long, so become really a rebellion. And so they call my uncle and auntie and go, now I'm going to send this kid to you. Now you're going to help me to manage her. So that's how my parents decided, to send me out to US.
And why didn't you end up going down the biology, some biotech or healthcare route? You ended up in technology when you were at Solomon Smith Barney and then Lehman Brothers. Is it just the way it worked out, or you didn't particularly want to meld your 2 degrees together?
Don't get me wrong, I'm still very interested in biology, but I didn't really enjoy the live lab too much, because I did I was sent to the graduate school. I finished my college within 3 years in biology degree, and I was ready to go to the graduate school. So I started doing the papers for my graduate school, and that was PCR, polymerase chain reaction. That was a DNA sequencing papers I was doing. I would have to stay in the lab for 15 to 20 hours a day when I was running the experiments, and so that I feel that that's kind of not really the lifestyle I like. And then in the meantime, I have 1 year that I can choose to take other classes. So I choose to take some business class, finance classes in the college.
Well, that's great. So you chose to, your firm is very much the kind of firm that we love to have as a partner with us, because it's very deep in specialty areas. But you launched a firm at a very challenging period of time, right after the global financial crisis.
Indeed. I was pretty hesitant to tell people that I was going to do a hedge fund, because people hate hedge fund around that time, 2008, 2009. It's the most hated industry, I would say, at that time. Probably after Madoff, that the hedge fund industry had a very bad reputation in general, and people lost money on hedge funds. in 2000. So they thought that hedge fund would never lose their money, but they actually, they lost money in 2008 a lot in hedge funds.
Oh, yeah.
Yeah, so at that time it was very difficult.
Well, it was
Very
a
tough
gutsy move.
environment.
It was a gutsy move to go out on your own. Now, tell our viewers, give them the thumbnail of how the firm invests in the short story. We'll get into it in more detail. But if somebody stops you on the street and says, "Tell me how your firm's investment strategy and how you do it," what's the short story? In your words, not what we read.
We're looking for compounders, basically, earning compounders. That's what we are looking for. If you compound your earning by 20%, 4 or 5 years, you double without PE re-rating. But usually it will couple with the PE expansion. So we're looking for a company that can consistently grow in earnings.
And you chose to focus in Taiwan.
It was a very neglected country. A lot of stocks were trading at very low PE multiple, and not many people discovered them.
Because it's so dominated by Taiwan semi, or why was it neglected? Just out of favor as countries and industries get out of favor?
Number one reason is that the political tension between Taiwan and China make people get nervous about investing in Taiwan, number one. And number two is that the Taiwanese companies are very, always say very nerdy. I mean, the CEO, they came out from PhD in US, and they were the CTO of companies before they founded their own companies. So they were not very good at articulating the stories. So they know the technology, they're very good at technologies, but they are not very good at communicating with investors. And then another thing is that people have to travel. They are not very good at speaking fluently in English. Especially some traditional company like consumer type of companies or manufacturers. They are not very good at speaking in English. And so if you really want to understand the company, you have to travel to Taiwan. And
interesting. It sounds like
them face to face.
It sounds like an unconventional inefficiencies in some ways.
Yes.
Whether it's a nerdy personality or
language barriers, yeah. And also traveling. You have to come to Taiwan, and so that become barriers for a lot of investors to really understand the companies.
And so it's been almost 10 years since you started the firm?
Yeah, about 11 years, yes.
Has that dynamic changed much over that time, or do you still find great opportunities because of those inefficiencies, great companies at great prices, I'll say?
I think dynamic changed just a little bit, but for the mid-size type of company, I'm not talking about super, the index-weighted company. For example, TSMC, they're very good at handling investors, and right. Of course, their English ability is also very good. But besides those companies, most of the mid-sized companies, they are still not quite good at talking to investors, and that become more opportunities.
That would think would be a big competitive advantage for you in some ways.
Well, and the other thing is that the sales side, they have a lot of layoff, and they are hesitant to really investing a lot for hiring the analyst, because I think it's associated with the trading commissions coming down almost every year, so that the investments on the research becomes less and less. And also they tend to put more investment dollars in China, not Taiwan or any other countries, if you're comparing, relatively speaking.
Yeah, I think about investment committees that I sit on, and Taiwan almost never comes up.
Yeah.
And China's a very prominent part of the conversation for good debates and other things. And when we first met, I was thinking, how often have I actually had somebody want to discuss China as an important part of a portfolio or a great opportunity. It's very rare.
Yeah, before when I talk to allocators, they always say to me that we only invest in China and India. Those are the two countries we feel we can understand.
Well, I would think that's a big advantage for you.
Yeah.
Continually to be that interested. Now talk just a little bit about the Taiwanese market and what it's made up of. And obviously Taiwan Semiconductors, $600 or $700 billion market cap. It's a big company, but is it largely technology? Is there a broad base of mid-sized companies that are attractive to a firm like yours?
Yeah, speaking of Taiwan, I have to start from Taiwan Semiconductor because they have such a technology leadership. So that really supports and solidify the whole Taiwan semiconductor supply chain. And over the time, they also helps the Taiwan technology industry to venture into all different kinds of applications because they have the whole spectrum of low-end, mid-end, high-end foundry technologies. So this company is indeed, I will call them a technology incubator for Taiwan. So Taiwan is very heavy in tech, 60-70% weightings in technology.
But that leaves some other. There's finance and retail. Are they two others that are strong?
Yeah. So financial is about 13-14%, and then there's a lot of consumer companies. And there is a plastic sector, plastic energy, that's about 6% of the index. That's it. All the others are very, very small. Within the technology space, semiconductor is the largest component in the technology. And as probably most people know that Taiwan is above 80% of the worldwide market share in terms of semiconductor chips.
You say everyone knows that. I bet it's a surprise to some people. Just name a couple of the big American companies that are dependent on it.
So for example, Intel definitely they have their own fabs, but they now are behind because their foundry technology is not advancing enough, quick enough. So they are working with TSMC and. Nvidia, for example, probably most people who are in gaming industry, in games, they probably understand AMD, Nvidia. They are the two biggest players in gaming and data center. They do 100% with TSMC. Qualcomm, they do majority with TSMC. Last year, they ran to Samsung and worked with Samsung, and now this year is 100% TSMC because they found out the technology is still behind in terms of the other foundries. So a lot of U.S. fabless companies, they are working with TSMC for the chips.
Yeah, no, it's amazing how important it is to the point where we will get to politics a little later. It could be it's one of the reasons the U.S. in some ways needs to support Taiwan, but let's hold that for a separate part of the conversation. So you've come out of you've had experience in different parts of the investment management. I want to talk just a second about portfolio management itself beyond. You run, it's largely market neutral and you choose to do that. Did you think about you doing a long only fund when you started out? Or did the market tell you that market neutral was the preferred? How did you make a decision to be in that space on the one hand? And then we'll talk a little bit about how you go market neutral, which is unusual and clever.
When the fund was launched back in 2010, we just get out of the big financial crisis. So most people don't want to take the market risk. A lot of our investors, at least. And then there is another big risk, which is a political risk, Taiwan-China tension. And that's always something that we couldn't really say there is no risk, although we think the possibility is very low of there is a war in between these two countries. So because of those two reasons, market neutral fund was the first fund that we designed for people who just want 10-15% return, annualized return, without taking any market risk. So if people go, yeah, what if tomorrow China bomb Taiwan? I get this question a lot when we launch a fund. So we get the whole portfolio completely hedged by doing the index hedging, index shorting. So we've done the best we can to minimize the risk.
And do you end up with a beta close to zero over time against?
Yeah, the beta is close to 0.2 because we're still overweighting technology, and technology has a higher beta. So hard to neutralize beta completely, but getting to beta close to zero is always something that we can do.
And it's interesting, the shorting the index is not all that common, at least in my experience with long short. And I think it's quite clever because it's still a concentrated market, and it stops you having to be short by name, and that adds an element of risk beyond what you're trying to accomplish, which is to get your investors' returns with and mitigate the overall risk. It's a very clever strategy. I mean, clever in the best sense. Sometimes clever is bad, but in the best sense. Listen, one of the other things you all have done is ESG has been an important part of your strategy as well. And just be interested to have you share with our viewers, and Francis is obviously a key part of this, how you think about ESG. As we've discussed, screening for Catholic values is a core part of Catholic Investments strategy and what we hope we bring to our investors. But just share a bit, because as you know well, particularly in the US, ESG has become very prominent. It means a lot of things to a lot of people, and there are a lot of firms that don't have that much experience in it where you do. So share with us that journey, if you would.
Yeah, I can talk a little bit, and then Francis will get into more details.
Great.
So this ESG concept was initially initiated by TIFF, and they really help us to getting everything together and help us to also form our policies. And through the whole process, we actually found that the ESG really help us not just to make sure that the company that we invested they have a sound ESG policies, and they are doing the right things for their own employees and their customers, and the capital expanding strategy, capital expansion, but also help us to realize that, with ESG, the expansion is going to be limited and the cost is going to be higher. So it's actually pretty important for our investments, if we consider ESG to be part of the analysis, company analysis or industry analysis. Because of ESG, there are a lot of industries, they're expanding much slower, and the cost for expansion is much higher. And that's something that we didn't put into the equation when we analyze those industries. Now we have to put an ESG factor to those sectors. And then we also have a big list of the non-touch, stocks that we couldn't really, expose to any of those stocks. Of course, those are very much Catholic value thinking. And for example, genetic editing and abortion, those type of sites are definitely no for us. So we follow those, and the list get updated on a frequent basis. So maybe so that's from me, and maybe Francis can talk about how we implement it in the portfolio.
Sure. Yeah. I mean, I think just to add on to that, so we formally implemented ESG considerations into our investment process in April of this year. We were a UNPRI September of last year. TIFF has helped us a ton in terms of how we've implemented our processes and how we observe it. But the one thing that we had always kind of realized was that it was quite organic and synergistic with how we invest, as well as how we operate as a fund. So from a DEI perspective, 60% of our partners and senior staff, 60% plus are female, and that's just something that's always, Evelyn is the leader and it's always kind of been part of that, and it's kind of trickled down. So, pre kind of where ESG became more popular, it's just something how we've operated as a firm. From an investment perspective, it's also been very organic. So the sectors that we look at are very aligned to a lot of the sustainable development goals, the SDGs, whether it's EV, clean energy, a lot of these carbon neutralities, or on the digitalization side, most of our portfolio is catered in that way. The way that we implement ESG considerations into our investment profile is not just negative screening. It's also, we have our own proprietary rating system where we evaluate companies. So perhaps you are a ESG positive sector such as EV or clean energy, but we will also look at it from a fundamentals bottoms up perspective as well, to see whether or not they comply on, say, the S and the G as well. And that's something that really has helped us with how we observe investments and look at the opportunity set going forward, especially as things grow on the carbon neutrality side.
That's really interesting, that additive aspect to it, that when we started out, and when other my partner in starting this enterprise was Scott Malpass from Notre Dame. We were talking about Notre Dame earlier, chief investment officer there, and they've been screening for 30 years, and they have the best record in the country of managing endowments. So it hasn't been at all, it's actually been additive, not a negative to screen. I'm interested in whether how companies react when you want to talk about these kind of things. If you're doing the analysis, is it unusual for an investor to ask about the S and the G? The E is always a little more prominent. How is that? Again, most of Western companies are getting used to it, but still learning. Interested in how the Taiwan market thinks about this.
Yeah, I think the really big thing about engagement is it's really easy to ask the question, and then the company from an IR perspective will just comply, but they won't necessarily do too much. It's just more from an IR perspective. I think the difference, that perhaps the impact that we can make, is the fact that we've known these companies for a decade plus.
Yep.
So when you have this conversation with them, it comes with a little more heart to it. We are actually trying to help them out as much as as ESG is important as well. So I think that's where engagement matters more, especially for Taiwan, as well as some of these other regions as well, as opposed to just being kind of that generic response from an IR perspective.
That's really a positive. That's a positive story, actually, and means a lot, because it's again, it's something that's core to our values as one of your LPs, and TIF has been a great partner in helping us do that. And frankly, we'd love to have more and more managers hear that story as well, right? That it's value add, and your tenure with these companies, I think, is probably a critical part of it, as you say, that they trust you, that you're not chasing a fad. You actually want them to do well, so your partners do well.
Yeah.
That's Evelyn, from a client standpoint, beyond TIF and us, have you had do other of your LPs want you to pursue more from an ESG standpoint overall?
Yeah, we are seeing increasingly more LP that are pursuing ESG. As a matter of fact, we have some new pension fund investors in endowment. They just send us a letter. I just received a letter from them, they really want to emphasize ESG, and they really want to understand our ESG policies better. So that's I'm seeing this ongoing thing from our investors as well, from the other investors.
Francis's description's about as positive one as I've heard. It's really a win-win in the best sense, and hopefully it'll continue to have momentum. Can I change topics for one that's New York Times story, not Wall Street Journal story, and that's tensions between the mainland and Taiwan, and how you think about that. You've mentioned it a couple of times. The headlines come and go, but just talk a little bit about your perspective, both as a person who was born there, has family there, but makes her living investing there as well. Be very interested in your point of view on the near-term headlines, but the longer-term things that we might see.
Yeah, I would say we have no advantage in predicting this political tensions. The thing that we can do is to continue to monitor this risk. And I'd love to hear, if you have any views on how to assess the situation. For us, who are born and raised in Taiwan, we think it's a very, very low probability to have a war. And as an investor, we don't want to focus just on the negative side of Taiwan and China, but there is a lot of beneficial relationship in between these two countries. For example, a lot of China domestic market have been the biggest drivers for a lot of Taiwan companies. They offer a much bigger markets for the company. So our responsibility is to see those opportunities from all this risk and the political noises, and looking for chances to increase our investments if we see some good opportunities.
Taiwan itself seems to take the stresses and strains in stride. It's been a remarkable success story. And does the political issues, it doesn't seem to affect, it's business as usual for them. I suspect that there's always the risk of a problem with mainland China, but they go about their business, not spending all day worrying about it. Is that an overstatement on my part, or?
Yeah. Most people are not worried about that, or maybe they are pretty numb about this risk. Since we're little, we're told that this will happen, but so many times it doesn't happen. And China also say this, I will take over Taiwan. Taiwan is part of China, but they're just saying it. So when people saying it so many times and nothing happened, people naturally think that's not going to happen. And Taiwan actually provide a lot of technical support and know-how for China companies, especially, China-US relationship was kind of broken 2 or 3 years ago. China does rely on Taiwan a lot for a lot of technology know-how, especially in semiconductor industry. That's something that they're still behind us for many, many years. And so I think the situation, again, is definitely there are risks, but we are working as brothers with each other, cooperate, very cooperative on a lot of aspects.
Like the ESG story, that's an encouraging story. It's better than the headlines we read in the US. Let me ask you one more question about Taiwan, a macro question. And the other big story, it happens to be Christmas season as well, is supply chain. And you already mentioned that in chips in particular, and you can't buy a new car, kind of stuff, all that stuff, that there were challenges. How do you think about China's impact, positive or challenging, Taiwan's impact on our supply chain in the States? Is this just a bottleneck in the short run that we're seeing, and whether it's around chips and we need more capacity, or how do you think about that and how it might affect your investment opportunities in Taiwan?
Yeah, that's a very good question. The chipset shortage is more relevant to the content growth in all the applications that we are seeing: high performance computing, artificial intelligence, all the chips in the car, electric vehicles driving, but also you need driving assistance, software or infotainment in every car. I mean, consumer demand it. So if you look around, you know, probably more computing, more IC involved in your daily, you know, life, more than what you know. So that's something that I think companies didn't really forecast it. So when they plan out their capacity expansion, they only think about from stable growth of PC, stable growth of smartphone, but they did forget about all these new applications and also the content, as I said, content growth story in car is totally got neglected when people, you know, plan out the capacity. And I think that was the main reason for a shortage this year. And will continue to be tight going forward.
That's interesting. And I assume it's why the big announcements we've seen about new fabs coming in the States is part of that, but it takes a few years to build a major fab, correct?
Right. Yes. A lot of semiconductor process, you know, it's not like you can buy a piece of land and building factories next year and then we'll be done. No, it usually takes about maybe a year and a half or 2 years to finish building. And the semiconductor process is also pretty hard process. You need to get your yield rate to a certain degree. And that's pretty challenging. And the company keep migrating to, and that's the technology required company to keep updating the technology. So then the yield rate becomes such a difficult challenge, right? So that a lot of things that slow down the making the entire industry to run very tight.
It is. It is interesting. Just the pandemic has made us all realize some things about how tightly we manage inventories and other things. And when with just a little disruption, and it creates an echo effect all the way through the supply chain. That's remarkable.
Yeah.
Remarkable. So, Zela, you're with us. I don't want to. I've hogged more time than I probably was allotted, but let me turn it back to you for questions from our audience.
Yes, we had a couple of questions. Some of them we answered, but one of the questions is about the themes in the portfolio. We talked a lot about technology. What other themes do you have exposure to in your strategy?
Yeah, one of the very big exposure we have is in the semiconductor, and the new ideas are, as I mentioned, we are pretty excited about the IC content growth in automobile industry. So we have a couple of fabless companies and also the component companies that reguling electric vehicles and also the regular ICE, regular cars content growth. So that let me give you an example. There is a company that does the sensor packaging in Taiwan, and you know, if you need to have a more security, even you're driving a regular car, you will have more sensors into your car. So that's what I mean, the content growth. If you have more sensor in the car, then you need more people who make the sensor and who make the packaging of the sensor. So that's kind of one very important thing in our portfolio. The other investment thing, the technology, I would say, those are the components and materials that we're seeing. For example, data center technology migration, and it continue to grow. So we found a few data center components, for example, battery, the CPU socket, and those are the component play we have in the data center. Right. Those are the technology, but besides technology, probably a lot of people don't know Nike, Adidas, all the clothes and shoes. Most of the ODMs are in Taiwan. So Taiwan manufacture not just your chips, not chips for United States, but also the clothing, shoes, Even Lululemon, their fabric and clothes are from a Taiwanese company. They partner with a Taiwanese company. So those are the we call consumer discretionary. And because of the pandemic, they are gaining market share. And because they have regular ESG policies, also they help them to get market share. So we also have a company like that. Electric bike, probably people don't know, a lot of bicycles you bought from the United States are actually made from Taiwan. So Taiwan make bikes, and it's a very big bike exporter, bike and electric bikes. So those are in our portfolio as well.
And there's a huge backlog for bikes. My husband has been looking for one. Anyway,
I'm gonna just ask one other question on that. I didn't ask Evelyn, how many names do you have in the portfolio on a regular basis? I'm interested.
Usually about 80 to 100 names, quite a lot, including Taiwan and China together.
Interesting. And largely equal weighted, or some with very heavy bets and then a tail?
Yeah, for top 20 is about 55 of the portfolio.
Okay, so concentrated.
Yeah, it's very, very concentrated on top 20, and then we take small positions beyond top 20.
Got it. Helpful. Thank you. Sorry, Zela.
And to continue on that theme, somebody's asking, what is the capacity of your fund?
Sure. Yeah, we're currently running around 2 billion as an AUM for long-only plus market neutral. So we're thinking about maybe soft close around 3 billion.
Nice. Okay, so we have a couple of questions that just came in. Has inflation and some of the U.S. market conditions affected your strategy and your outlook? And what type of correlations do you see in the two markets?
I would say inflation does affect the U.S. market a lot. And in a way, since Taiwan is a big supplier for U.S., so if to the degree that because of tightening and that slow down the consumer demand, that will affect Taiwan company a lot. So, a lot of demand. Taiwan is basically exporter, right? So a lot of demand is coming from U.S. So if inflation that eventually hurts the demand, overall consumption, consumer demand, that means the suppliers all get negatively impacted because of this. So we actually predict that next year, the demand will be moderating. So the tightness you are seeing this year, probably you won't see that next year. It will not be that tight.
That's interesting. And that's globally, not just the U.S. in terms of demand for your company?
It's more global because Taiwan is not only export to U.S., they export to every country as well.
Yeah. That's an interesting forecast.
It's true.
Well, we have 2 consecutive years that are basically technology company cannot fulfill the demand. We have 2 explosive growth for 2 years from a very high base. We think a moderation is just very natural, just come very naturally.
Wow, interesting questions coming in. Was Taiwan impacted by the water shortages early this year or the electricity shortages? And can you comment about that?
Yeah, Taiwan does impacted by water and electricity shortages, and especially for semiconductor industry. Those are very critical. So we are actually monitoring the policies in terms of how many power plants they will plan to build. And I think they are still in the discussion phase. So we're actually monitoring that very closely.
Yeah. I think we have one last question about somebody's asking, what are you what do you do to get away from your job, which is very demanding? What are your hobbies?
I'm a pianist for many years. So I play piano for the choir in the church, and music is pretty big part of my life besides work.
Oh,
And
that's
not to
amazing.
mention a teenager and a fourth grader, right?
Huh? Sorry.
Not
Yeah,
to
no, my
mention
kids
a
are also
teenager
too.
and
In terms of personal hobbies, music is a very big part of my personal life, and of course church activities. I've been doing the St. Ignatius spiritual practice for about 2 years, and so that required me to go to the retreat centers every week. I'm in a program that I need to go to the retreat for an hour every week, and I have been doing that for 2 years.
Wow, good for you. Francis, what do you do to unwind?
I love cooking. So it's something that, for me, it's therapeutic.
And if you're up at 3 a.m, you could make breakfast for lots of people.
Yeah, I probably will afterwards. Yeah.
Great.
I think we have one last question about the hedge fund space in Taiwan. How crowded is it? And are there any inefficiencies that you're able to benefit from? How many other hedge funds there are in Taiwan?
I don't see any other hedge funds in Taiwan. Well, at least not sizable. There are a lot of local funds, and they are very good too. They are very smart. But there is no hedge fund industry in Taiwan, unfortunately. A lot of people ask me, who are your competitors? I would say the local fund managers are my competitors. So there is no other Taiwan long-only funds or Taiwan hedge funds that I see as my competitor. Definitely BlackRock or Allianz, they do have Taiwan long-only funds, but I heard their turnover is very high. So so I don't know too much.
So listen, was that last question, Zela?
I think that's it, unless I missed one. I don't know, Jack, if you saw
That's
others.
great. That's great. I just want to thank you both very much for a really interesting discussion. I know I've learned a ton, and I hope our guests have learned as much as I have on this, Evelyn and Francis. And the positivity you bring to your profession is really tremendous. Evelyn, your very interesting background dovetails so nicely with Catholic Investment Services as well. So, listen, we're grateful to be a partner with you, as Zela said at the beginning, and I'm really grateful that you'd spend the time with us, Francis, especially you in the middle of the night. But we're grateful. So, on behalf of our Board of Trustees and our investors, I want to say thank you. Let me just turn it back to you, Zela, to close.
Thank you so much, all of you, and especially the listeners, and all the great questions. We really appreciate it. If any of our listeners are interested to learn more about Catholic Investment Services or the Institute, please don't hesitate to reach out. There's going to be a quick audience survey to follow this once we close here. Your feedback is very valuable to us, so please take a quick minute to answer the 3 short questions. Thank you for joining us. Please be healthy and safe, and Merry Christmas to everyone. Thank you. Bye-bye.
Bye, everybody.
Bye-bye.
Thanks so much.